Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and I'm going solo again this week to talk about one of the favorite topics I've covered here many times on the podcast. But now that stocks are soaring to new highs once again and are really hot here after the election in November 2024, I've been getting a lot of questions on the YouTube comments about when to sell a stock. We've talked a lot about when to buy. We use the Zacks rank to determine when to buy, but when do you sell? So again, I've talked about this topic many times over the years, but it usually does come up when we see these kind of red hot market conditions. Everybody's sitting on stocks with some big gains, or hopefully everyone is. And then you begin to wonder, should I be staying in this? Should I cash in some of this? What should I do? And the question I got on YouTube was, again, we talk a lot about when to buy, but we don't talk that much about when to sell. Now, the Zacks rank does have a sell component to it. Remember, it ranks 1 through 5, with 1 being the strong buys, but 5s are the strong sells. The strong buy and the strong sells make up about 5% each of the Zacks rank universe. And then the holds are the biggest portion at the number 3s, and that's 80%. We also have just the buy stocks and just the sell stocks. Those are also 5%. So the actual buys, either the buys or the strong buys, and the sell and the strong sells are just 20% of the total Zacks universe at any given day. Now, remember, the Zacks rank can change daily. It is based on changes analysts make to the earnings estimates. So it is a computer algorithm. It goes in, it tabulates everything that's going on with those changes, either up or down or nothing, depending on what the analysts are doing. We're still in earnings season right now as I'm recording this in November 2024. So we are still seeing a lot of changes with the Zacks rank because companies are still coming out. They're meeting, beating, or missing, but they may be raising guidance, cutting it, and the analysts are all adjusting their earnings estimates based on that. And also remember, it looks at the full year of the earnings estimates. And we are in almost the end of 2024 now. Yes, hard to believe, but we're getting there. And so now the rank is really looking at 2025 estimate revisions. So keep that in mind if you're going on Zacks.com and kind of looking yourself to see what's happening with a particular stock. It's really looking at 2025. Now, also remember, it's a short-term recommendation. Just 1 to 3 months, because it's changing all the time. It basically can change for sure almost every quarter as those new earnings come in and the analysts make their changes and adjustments. So it's not as good of a tool for those who are buy and hold and holding for years and years. Although I do use it to buy stocks that I want to buy to hold for a long period of time. And I still use it to guide me, even if I've owned a stock for a couple of years, especially if I see it turn up as a number 5 strong sell, because it takes a little bit of something extra to get to the number 5. Something has to be going on there, as I discussed just even in the podcast I did just prior to this one about whether or not you should buy or not certain popular stocks. And we talked about Starbucks in that podcast. It is a Zacks rank number 5 strong sell right now because all the estimates are being cut, but it's got the new CEO in there. So definitely things are going on behind the scenes there. And that is being reflected in the number 5 rank. So I do look at the rank for my long-term holds. And if you recall, I have owned Starbucks for about a decade now. So it is one of my long-term holds, but I did look to see what what's going on with it being the number 5 rank. And I'm still in it because that's the short-term recommendation. And I am willing to have some patience to wait it out and see if we don't get a change in that rank sometime next year. I think we will, but only time will tell. So that kind of covers what the rank can do for you. And so it gives you some guidance, especially if you are a short-term trader. But for longer-term investors, it's not quite as good a tool. But this leads me to, what do you do with your winning stocks? Should you be selling them? How do you know when to sell them? And the number one piece of advice for all investors is you should have a plan. Kevin Cook and I have talked about this many times on this podcast when we've done this one together, but having a plan makes you feel more in control with what is going on with the stock market and your individual holdings. It'll ease some of your anxiety, I think. And yeah, there is some anxiety when stocks take off and you're sitting there with a big winner, unsure of what to do. And so sometimes, just having that plan sitting there will make you feel more in control. It also makes it clarify the goals you have. What are your goals for this investment? If you're a short-term trader, maybe you're just trying to get those short-term gains, getting in and getting out, maybe getting in and out at a certain level, either the Fibonacci level, or, some people just say 20% higher than what I got in, that's when I'm selling. Maybe all-time highs, that's when I'm selling, but that's a little bit more difficult right now because so many companies are hitting all-time highs, their stocks, and they continue to hit those day after day in recent days. So many people think I'm leaving something on the table if I sell out here while the stock is hitting all-time highs. And as my other work colleague, Dave Bartosiak, often says, momentum begets more momentum many times. So a lot of traders don't like to sell out when a stock is hitting new highs because odds are good it may do it for some period of time. And we are, again, seeing that right now in this incredibly hot bull market rally we're seeing here in November 2024. But I thought I'd bring a couple stocks to look at today to just talk about what a plan might be if you own some of these and what the underlying fundamentals look like as well, because that's another factor in your decision to sell. You may have the goal. What if it reaches your goal? I want to double my money. Oh, that stock has now doubled. Do I sell it here? You might want to look at what is actually going on with the company. What is the sales growth looking like? What do the earnings look like? Is it still a strong story going into next year? Maybe I want to revise my goal higher now that it's hit it. Also, as far as goals, you have to ask yourself, what was my purpose in investing? Am I saving for some type of goal? Am I investing to buy a house? Saving for my child's college education? Saving for a vacation? Saving for retirement? These all will have different motivations, different time horizons, which is also very important. So there's a lot that goes into, should I sell now? And a lot of it is going to depend on your own particular situation, goals, and investing stomach, so to speak. Because as I always say, if you can't sleep at night because of an investment, and an investment that's going up, as I mentioned, can be filled with anxiety as much as one going down. It might seem hard to believe, but having a huge winner in a portfolio sometimes makes people nervous. So I also say there's nothing wrong with taking some profits off the table. Nothing wrong with cashing it in. Perfectly fine. That's why you're investing, after all, is to have the profits. I also encourage people that you don't have to sell your entire position. You can sell 25%. You can sell 50%. You can sell 90% and hold 10%. whatever you feel comfortable with, you can cash in some of the gains, because I know for some people, cashing in at least part of it reduces the anxiety because you have locked in the profit then. And then letting the rest of it run is what I call it. So you still are a winner, and then you see if maybe you can win even more with what's left of that position. So a lot of things to keep in mind and consider out there when you're thinking of selling a stock. Let's dive right in now and see a few stocks that I've brought. I know they're hitting new highs, and I just want to take a look a little bit at the fundamentals so that we can get some clues on, should I stay in this? Should I not? Okay, Sherwin-Williams is the first one. I haven't talked about this one in a long time. I followed it for many, many years. Ticker is SHW. It's been in the news because it's going to enter the Dow Industrials. And so that's given it a little bit of a boost here as well, but it is trading at new highs. It is a Zacks number 3 right now. That's the hold. So that's not really helping us decide, even if we were looking at something short term, right? That's just telling us to hold it. But I put up the price of consensus chart here, and you can see just how good it looks. So paint has been in a recession. You can see the 2022 earnings declined. 2023 declined, but not as much, and saw a little bit of a boost there at the end. 2024 earnings do look better, but look at 2025, 2026, big earnings growth there expected on the earnings estimates, because everyone is expecting, especially with the Fed rate cuts, for those mortgage rates to come down, even though they're not so far, but they're still expected to in 2025. And as mortgage rates come down, more people buy homes. When you buy a house, what is one of the things you normally do, usually on the interior, but you paint? So you have a lot more paint sales going on, and it's an easy way to make the changes right when you move in. So we do need higher home sales that will increase paint sales, but these estimates are telling me the analysts do see much better days going forward. That's why the stock back to busting out to new highs here. It's not that cheap at 34 times, but I've been waiting like years for Sherwin-Williams to actually get into the value range, and it really hasn't. So I'm just bringing up the quote page now. You can see here it's trading at 34 times. This is detailed estimates. PEG ratio is quite high, 6 times there. People are definitely hoping for the future here. Just even looking at sales, it's pretty much flat this year because paint is still mostly in the recession. But next year, 4.4% sales growth. But we do have the nice double digit, as I mentioned, earnings growth, 11.9% for next year. But that's what's making the stock a little more expensive. So this is interesting. We are seeing a lot of analyst cuts. Only one higher in the last 30 days for 2025, but 4 are cut. So I'm presuming that's off the earnings estimates, and that the analysts were maybe getting just a little too bullish. So they've had to pull it back in a little bit for next year. But let's ask the question, should you sell this or not? The earnings are telling you, hey, maybe you might want to stick around with the double-digit earnings growth returning. That's what I like to look at if I'm thinking of holding some of these stocks that are now hitting these new highs. I do look at valuations because I am the value investor strategist here at Zacks, the value guru. 34 times isn't terrible for me if I've especially been in this for a while. I just can't get in right now at these levels as a value investor. It's just a little too pricey for me, but I still have it on my watch list. I still am watching it for any, kind of pullback here. Where I could get it maybe under 30 times, it would be a little more attractive. I see the PEG ratio is at 3.1. So that isn't terrible. It's not as bad as 6.1, but still higher than what I would look for as a value investor, which is, maybe under 2, but certainly under 1 gives me a value PEG. But many of these stocks now have had nice runs. They're mostly not going to be values that we're talking about here, but I don't know, maybe a few might be. We'll see. So that's Sherwin-Williams. I'm holding it, and they just got put in the Dow for a reason. And I do like these old economy type stocks. Paint's not going anywhere, and you can't AI paint away. So we are going to have paint no matter what happens with the AI revolution. That's Sherwin-Williams, ticker SHW. Okay. I want to kind of stick on the old economy stocks and look at United Rentals. I've talked about them over the years, ticker URI. They are one of the world's largest rental equipment companies. They're a 3-2. They reported a while ago. So a lot of these that reported earlier in earnings season are kind of just, they revert back to the number 3 where 80% of the stocks are often. So I'm bringing up the price and consensus chart, and this one is up and to the right as well, looking pretty good, not quite as strong of earnings growth as what we saw with Sherwin-Williams, but the chart is at least attractive, with 2025 showing some earnings growth and nicer earnings growth for 2026. But these shares just show no desire to end their streak, just going straight higher. And I'm just looking at the detailed estimates. It's trading at 20 times now. That's not terrible for most stocks. PEG is at 2. That is much more attractive for me as a value person. Let's look at the growth. 2025 earnings growth, 7.5%. That's pretty much reflected in that chart. Not quite double digits here. Sales of 4%. This is kind of how United Rentals has always done it. And it uses a lot of acquisitions of other companies to kind of do the growth. But I've always liked it. If you have infrastructure going on, any kind of construction, they're going to be involved, and they have been. And that's why we're seeing the nice earnings growth. And the stock not super stretched here at 20 times. So should you sell this one? I've been in and out of United Rentals over the years. Sometimes, it was because of some fundamental reasons where the infrastructure and construction was expected to slow pretty dramatically. We have had a slowing on single family homes, but other areas of infrastructure are still red hot. Bridges, roads, airports, even hotels, data centers, red hot on the data center side, EV battery plants. We're building the chip plants. A lot of that is being priced into United Rentals now. So I'm not fighting that momentum. It's pretty strong here. I don't think if I was still in this, I would not be selling here. I like everything that's going on, and I like this nice steady earnings growth. So I'm sticking in United Rentals, ticker URI. Let's move over to the consumer a bit. I own Royal Caribbean in Zacks Insider Trader. It was already trading near highs when we got in. I think it was one director who decided to jump into it, and even after the big run it's had. And I said, if they're willing, we are too. Royal Caribbean, ticker RCL. It's a number 2, so that's the buy. So I'm liking that right now. It did more recently report earnings, so that's probably why it still has the good Zacks rank. Let's look at the price and consensus chart, because that is my favorite, and it'll tell us a lot about what's going on with earnings. Okay, so it is up and to the right, as you might expect. They've seen strong demand for cruises. Next year is already mostly sold out, from what I understand, 2025 or getting close to it. People are already starting to buy for 2026. Also, as people's stock portfolios rise, they feel the wealth effect of that. And what do you buy when you are feeling real good about your stock portfolio? You might want to buy a nice vacation. So that's going to help companies like the cruise lines, hotels, even the airlines, going forward into 2025. You can see earnings up and to the right, these are more narrow bands, even a little more narrow than United Rentals. Let's look at the detailed earnings to see. So I'm not expecting huge earnings growth here, but wait, it is. So this just must be how it shows up on the chart. So 2024 expect to be 71% and then 20% again for 2025. So nice double digits. It's just not showing up the same way on that chart, maybe because the chart is surging now and it has to like kind of mush it all together more than some of these others. It has been hitting new highs after the election nearly every day. So that's making it look a little parabolic, as we like to say in the investing world. But nice sales growth expected for next year, another 9% after 18% this year. So that is why everybody's still piling in. PE is not too stretched here at 20 times. That's not too bad given where it's come from. PEG ratio with that big earnings growth, though, is just 0.6. That is a value PEG ratio. Anything under 1 indicates it has both growth and value in the stock, and that's because the big earnings growth, even as the stock continues to soar and hit new highs. So some of these are surprising me that they're not altogether that expensive here. They're not dirt cheap with the PE under 10 either, but they're not at nosebleeds levels, at least Royal Caribbean and United Rentals. So would I be selling Royal Caribbean here? Well, I'm not. I did sell part of our position a couple of weeks ago before the earnings when it seemed just really red hot, and I did want to lock in some of the gains. So no regrets on that. I locked in some of our profit and the rest is still running. And so that's an option for many of you if you still have doubts, but you still are nervous and want to cash in on some of the gains. There's nothing wrong with taking profits ever. So that's Royal Caribbean, ticker RCL. Then I wanted to turn to a few even more red hot. I don't know if you can get more red hot than Royal Caribbean and United Rentals, but yes, you can. So I'm going to talk about, let's do Cava. The restaurant chain is considered to be the Chipotle of Mediterranean food. They are starting to expand more out of their base, which was the southeast part of the country. Cava Group, ticker CAVA, one of the hottest restaurant stocks out there. It's a number 2 right now. It is reporting earnings even as I'm recording this podcast. So when you hear this podcast, it will have reported. But even just scrolling down on the quote page now, we include the nice price to consensus chart right on our new quote page on Zacks.com. Go check it out because it's a very good chart to have right when you put in the quote. And you can see that it has beat every time since it went public in 2023, and shares are at, once again, all-time highs. You can even see the price to consensus chart overlaid on here, and it is for now, before earnings, up and to the right. Let's look at the real price to consensus chart real quick to kind of see what it looks like on that without having those earnings surprises and other noise on there. And this looks what you want it to look like. It's very sharp up and to the right for all the years up through 2026. They have been executing at a high level, considering that they were kind of, the new hot restaurant stock. And so far, they haven't made any missteps in their earnings reports. Will this be the first one? I don't know. I don't want to put a damper on the parade. So I'm hopeful. No, I'm hopeful it's still going to continue to execute here. What does the detailed earnings look like going into the number? This is going to change, obviously. But for 2025, we have sales growth of 21%. Like I said, they are rolling out stores pretty quickly. So this is just sales, not same store sales. But next year, earnings growth of 20% after 109% this year. So that's pretty impressive on Cava. What does valuation look like? Well, who cares about valuation on something like this? It's 339 times. but you would expect that given just the momentum in the stock, how many people love the brand. And again, it has been beating big. It has been executing. And those same-store sales numbers have even been executing. And that's hard to do right now in the restaurant group, is to overlap what the same store did in the prior year, especially now as the consumer is being very cautious on where they're putting their spending. So apparently some of the spending is going to Cava, and we'll find out this week if that is continuing. So this is more a stock for those who kind of gotten the latest, greatest hot thing, but momentum begets momentum. I don't think I'd sell this here, but we're going to find out after the earnings report. You may or may not see a pullback in these shares, or it could take off more. If you are just interested in the growth play, you're not a value investor, obviously at 339 times, then, you're sticking in it. You might have some fib levels there, and you're watching that. But this one, red hot, and given the market is red hot, I tend not to want to sell these types of stocks in these kind of market conditions. So that's Cava, ticker CAVA. And then we're going to wrap it up with a stock I own in Zacks Value Investor. I also own it in my own personal portfolio. And I know many of you own it too. So it is an AI play. It's Vertiv, ticker V as in Victor, R as in Robert, T as in Tom. We could have looked at NVIDIA, but I'm just tired of looking at NVIDIA for the podcast. So I'm using Vertiv instead. It's a Zacks number 1 rank right here, even though it reported a couple of weeks ago. So it always reports before NVIDIA, which it partners with on the build out of the data centers. So Vertiv is basically the data center infrastructure type play, the services to make sure the chips are, where they're supposed to be in the data centers and running those data centers correctly. So NVIDIA is one of its partners. And when NVIDIA beats and raises, Vertiv stock tends to, also follow whatever NVIDIA's is doing. So when NVIDIA does report later this month, this stock probably will be impacted. Now I'm on the new quote page again and just kind of scrolling down, and you can see that this is at new highs, not surprising. And it's put together a nice string of earnings beats the same way NVIDIA mostly has as well since last year when the AI revolution really started to pick up steam. And you can see a little bit of the price consensus chart here. It is up and to the right, much like NVIDIA's is looking like now. Not surprised because they are in partnership. But clicking on the actual price of consensus chart, again, up and to the right, this is looking pretty good and is probably double-digit growths through 2026. But let's take a look at detailed estimates to see what that's looking like for 2025, because that's all we have on here. 30% earnings growth expected for next year with 16% sales growth. That's very solid for any company, and I'm liking it. But one of the caveats is the PE is now very stretched now that it continues to hit new highs, trading at 47 times. I guess that's probably similar to what NVIDIA is trading at. It might be even more expensive than NVIDIA. PEG ratio of 1.38. That's pretty low. Not quite value at 1 and under, but for one of the AI stocks, I would say that's pretty attractive. So I'm still liking all of that. We have not sold in the value investor. It does not have the capability of selling only part of the position. However, I have to either be in it all the way or out of it all the way. So, but that being said, I would not be selling right here. We have seen some consolidation in October here before the election, where the shares were just kind of trading sideways there between $100 and $110. And now it's taken off again. I've encouraged people to buy on any kind of bigger pullbacks, which we have seen over the course of the last year and a half. There's been some significant pullbacks, over 20% of a pullback a couple times. So if you're worried about valuation on Vertiv, odds are likely it will pull back again, get a little more attractive. And hopefully it doesn't get too red hot here, because I don't like it when I see the PEs of, 100 or over on some of these stocks that are not really going to grow to justify that level of a PE. Does it justify 47 times double-digit earnings growth and 16% sales growth? I think so, especially given what's happening with the AI story, still ongoing into 2025. So would I sell this here? I'm not. And I'm holding it. The momentum is tremendous. And we're waiting for NVIDIA's earnings report to come up. And it should get another boost even off of that. So I'm always keeping an eye on it, however, and all of these stocks, it's a little hard to say, that any of these are just a little too hot to handle. There's always some of those out there, and it kind of when you see it, right? When you say, this doesn't really make much sense. It's looking like it's gone to crazy town, as the term is. So when you see a crazy town stock, you may want to move to the sidelines, at least with part of your position, if not all. And again, remember, if you feel so much anxiety you can't sleep at night, or if you've reached your goal for investing in whatever particular stock or ETF, then there's nothing wrong with completing your goal and, cashing it in and using the money towards what you were intending to use it towards. Nothing wrong at all with that. These are all hard questions to ask when you are in a real bull market like we are in, because these are just 5 stocks random that I just chose off the top of my head, knowing they were at all-time highs, but I've not dug into the charts on most of these recently. So it was a surprise to kind of see, maybe other than Royal Caribbean, which I am more familiar with. But these charts all look like what you want to see on the earnings side, up and to the right, nice earnings growth. URI is the only one that wasn't double digits on the earnings growth, but trading at 20 times. So valuation isn't too horrible there. So it's an interesting time to be a stock owner and a shareholder of all these companies. But the Fed is cutting rates, and you know what they always say: don't fight the Fed. Fed rate cuts, usually good news for the stock market, and we're seeing that right here, in addition to the deregulation hopes from the election results. So let me recap the tickers again. We had Sherwin-Williams. We started off with them. SHW, an old economy stock, also busting out. United Rentals, that's old economy too. They've been around a long time. URI is the ticker. Royal Caribbean, a lot of people going on those vacations now. Ticker R as in Robert, CL as in Larry, RCL. Then we had Cava, the red hot restaurant stock. Can they keep doing it? I'm hoping you're watching this and you already know the answer, but ticker CAVA. And then we finished it up with AI powerhouse on the data center infrastructure and services side. Vertiv, ticker V as in Victor, R as in Robert, T as in Tom. And as always, be sure to leave some questions on YouTube. You can get us there at zacks.com/YouTube. Subscribe to our YouTube channel. You can get the top stocks picks of the week over there too. Those are usually 2 Zacks #1 ranked stocks. So you get some hot stocks that way, plus all of our other video content. We're covering it all on YouTube. So be sure to get it all there. And you can always get this podcast on Apple. We're on Spotify and Amazon Music and just about anywhere you can get the podcast. But get us somewhere so you don't miss a single episode. And I'll be back next week with some more stocks.